Oh boy. Happy Friday, everyone. Hey, Nate, Travis. Yeah, Jam. Where the hell's your wife, Jam? She needs to haul you off and put you back into bed. Jerry, how you doing? Happy Friday. Oh, and here we are. No kidding. Uh, Listen, as long as you don't trade, you'll be okay. Uh, don't trade when you haven't slept. Hey, Mother Truck, what's going on? Juan, Mr. Simpson, my YouTube crew is here. Well, folks, it's Friday and we're at another all-time high. I got a message from one of the brokers we use, and they said that margin at night is normal tonight. They have an increased margin because there's no NFP. So, because of the shutdown. So, in light of that, it would make sense that they just keep marking up the market higher and higher and higher. Oh, let's there was one little inventory correction just a little while ago. So overnight inventory is once again long. Oh, quelle surprise, right? Bulk of the trading, at least 80% of it is above yesterday's close. Right now we're outside yesterday's high. So if we were to open here, we'd open on a gap. A gap means change, change of business. What's our high? I want to see how well these levels are working on the new contract. 67.84 and a quarter, and my levels, we're off by about 3 ticks. Let's see. And I think we have a poor high now, don't we? Is that a poor high? It is a poor high. So we have some competitive selling up here at 84 quarter. Yeah. This is just like those really bad zombie movies where it just there was our inventory correction here. J period, corrected inventory right down to the cost basis and then right back up. And I did not take that trade. Now let's see. We've got sellers up here. VWAP is down here at 74. That would have been a nice J trade if we had gotten long on the look below and fail of 78. Up to 83. That would have been nice. But it's tradable. You just got to really pick your spots. You have to really pick your spots. And we're just creeping. I am not a breakout trader, especially at all-time highs, and I think I've told you that a lot. If you are a breakout trader, right, there's, let me open up my trading software here. If you are a breakout trader, I would say to you, okay, if you know where the sellers are and the market breaks out above that level, what you can do, right? Now, I don't know how many times it'll work. I don't know what the probability of this sequence is. But if you're buying a breakout, you'll want to buy it above where the old sellers were and use that as support. I mean, as your warning sign. So in this instance, say if you were going long here, right? Say if you were like one of those degenerates that chases price and buys the breakout, right? Well, that's your warning level, and then there's your absolute out. Now, if you're feeling really like Daddy Warbucks, you can use this as a stop, but I wouldn't. That trade is going to work in a market where everyone's trapped short here because it's going to push price higher. And that trade will work after a correction. Like it wouldn't work here, but it may work here because we flushed the market out. I don't know if you guys understand what that means, but you will. Hey, yo, what's going on? Well, that breakout trade is, you know what, when you're trading size, Cisco, that breakout trade is like say you're long, right? You're long a bunch of product and you're running out of buyers and some big trader comes along and runs the stops and the thing breaks out. Well, you sell everything you can. You just hit every bid you possibly can and get carrots on sale. But they're chasing price higher and you can just nail them with so much supply and they'll eat it. And then, of course, the price drops, right? Because there's only that one wave of buying. So for breakout trades, I would say look for a breakout after a correction, right? Because the breakout, I don't know what the probability is. We should get you guys to track that on all your fancy software, right? And maybe you could get the. I'm going to be playing with that new AI this weekend, so maybe we can get it to, you know, help keep track of the percentage of times after an inventory correction a breakout will work. Because that's when it would make sense. Right. Now the sellers are right up here at 84 and 3/4. It's like a wall of them. Jam, what the hell are you doing? Brother, what are you doing? Are you like sniffing airplane glue or something? What the hell's going on with you? Dear Lord. Okay, sorry. Just take that off, okay? Go to sleep. This is exactly what I was talking about earlier. Uh, right. And okay, if you're a breakout trader, how do you be practical about it? Right? Well, in this particular case, right, if you're trying to buy a breakout and you see that there are constant sellers at this level, yeah, it might be a slow breakout. Right now, it's going to backfill. Right? When you want a breakout trade, you want that fast price action so you can get out of it quick. You don't want to be stuck in a breakout trade and have it turn into a position trade, right? Because a lot of traders I know lose. lose a lot of their money trying to trade breakouts to the upside and to the downside, and then they get caught in the reversal. So we have a proper high with 2 ticks. We've already had an inventory correction in the prior half-hour bar. Listen, Dr. Detroit. Cisco, go back to your loco moco. Yeah, he seems fit to trade. What, are you taking the other side? Or it's just like, you know those brokerage firms when somebody's just strung out and you just fade everything they do? I'm going long. Okay, I'm going short. Uh, yeah, exactly. We use breakouts to sell into. I mean, they're selling into it right here. Listen, if you were long 77, right? I'm going to try and help you guys think like professional traders, right? If you were long size at 77, if you're long, say, 1,500 contracts between 75 and 78, okay? And we're trading at 83, right? And Cisco comes along and shows me a bid for 150 contracts. Are you going to say no? No, you're going to fill it. See, I was thinking look above and fail of 83 and a quarter, but the last 2 days that I did that, it didn't work. And it was just right at this time, so I held off on doing it. My location would have been 83 quarter, 83 half if I was lucky. Now, where would we bid? We'd bid 81 and 3/4. If you are short, the stop at 82 has to break first, right? There's 81 and 3/4. Let's see if it bids there. Offers lifting. Now, why did I say 81 and 3/4? Right? I said if you were short here and your stop was here, I'd put some buy orders here. Why? Because I saw the bottom of those 3 candles. So I would front run those bids. Because last time, you see how the bid was here, then it moved here, then it moved here. As the bid moved up, that's probably where the first place that you'd cover. Does that make sense? This is how you can use candles in a practical manner, right? The bottom of the candles when they're moving up means the bid is moving higher, right? So this way you can use candles in a practical way. You don't have to memorize anything. All you have to do is observe and focus, right? When you're short selling, right, especially at all-time highs, right? What you're doing on that trade, that would have been the shorting the backfill, right? So when you're shorting a backfill, you have to know where they're going to stop selling, and that's very hard to figure out. So what you do is you look at the last place they stopped selling and lifted the offer, and that was here, right? Now, it might break lower. So, for example, if you were short 5 contracts up here and you cover maybe 3 here, right? Then put your next bid down here and then down here. So you covered 3 out of the 5. Try and cover 1 here, and then another one here to complete. Now, what do you do if the price gets back above 82? Just grab the offer. Take the ask and close yourself out. The top and the bottom is the top and the bottom. I don't care if it's a wick or a twick or a bwick. It's pretty simple. Bottom of candle, top of candle. Bottom of candle, top of candle. Right? As simple as it can be, Rosemark. Think hillbilly price action. Right? I don't look at wicks. I don't look at candle color. I don't look at patterns. I don't look at anything. All I look for is where they stopped selling. And here, they stopped selling right there. Right? Now, if we get underneath that, the next level I'm going to look for is there, and they filled that bid, so you'd have bought back the second one. And then the third one, or your last contract would be somewhere down here. You'd be looking for a fill. Right? So I don't care about wicks. Right? For me, a candle is a candle is a candle. Right? I think there's far too much emphasis put on wicks and candle color and all of that, and that distracts people from actually where they should be trading. I don't know if that makes sense to you guys. I'm not a traditional candle person. So for example, if you looked at this candle, right? The top of the candle is here. This candle, this green one. The bottom is here. See? Simple. The whole frickin' enchilada, Rosemark. Right? The top and the bottom. I don't know how much more simple I can make it. Top of candle, bottom of candle. Right? There's a candle, right? There's a candle here. Right? Maybe it looks like this, right? There's the top of it, there's the bottom of it. All I care about is the print. Right? Because the market doesn't care about wicks. The market cares about the print. What we care about is where it executed. Right? That's a transaction. Right? Because there was a transaction there, the candle goes down there. Thanks, Cisco. Do you guys understand that? You don't have to worry about wicks and all of this stuff. Just the top and the bottom. It can't get more simple than that. Thanks, Cisco. Right? I want to make this as simple as possible so you guys don't waste your entire life reading a book on candles. Because when I got that candle book, and I'm not knocking the guy, right? He's put a lot of work into it. You know, when I started retail trading, I bought this book on candles, and it was thicker than the Bible. It was like, I can't memorize all of this and trade at the same time. There's just no way. So how do you figure out? The sellers initiate at the top of the candle, right? There they are, right? And the sellers stop selling at the bottom of the candle. Whether it's a wick or a twick or a blick or whatever you guys want to call it, right? Now, how do I know this? Because I was the seller for 3 decades, right? So I know that up at 67, 84 and 3/4 that everybody was competing, and then they started to price compete, and the top of the candles get lower. They stopped selling here because there were buyers here earlier. See how we dipped into that little pool of buyers in this candle? Look, check this out. This is kind of cool. Draw a line here, right? Now look at how this candle came underneath that line, and the second candle, the low is higher. And now we're above that line again. So now you guys know that there's a whole bunch of traders who have buy orders in this area. You see? That's what creates support. Whatever you guys need to do to make it simple. Bottom of the candle, top of the candle. All you got to care about is the print. Yeah, I don't care about wicks. I don't use that term. When you think about wicks, I'm thinking about, scented candles. But you guys do whatever you want to do. Overcomplicate it as much as you want. Top and bottom, I don't know how much more simple than I can get. Right? There's a top and a bottom. Right? It's starting to lose it again. Yesterday was crazy. People were asking me crazy questions. Right? But top, bottom. Top, bottom. It doesn't matter what kind of candle it is. Just keep it simple. Okay? Keep it simple. You don't have to overcomplicate this. As soon as you overcomplicate trading, guess what? You're losing money, right? How do you use this information? Intelligently. Well, look what just happened, right? We came down to this area. We looked underneath, right? I don't care about the close. I don't care about the wicks. I don't care about anything. All I care about is where the candle printed. The candle, do you guys know what a candle is? It is the graphical representation of time in sales. So if a candle printed at that level, that means a transaction occurred. If a candle printed at that level, it means a transaction occurred. Right? And that's all you need to care about. Right? What I'm trying to educate you guys on, and you're fighting me like hell, is how do you know when to cover a short? Right there. Right? The candles go underneath that level and come back up. That means there are buy orders there. Don't debate the minutia of BS, you guys. Focus on what's important. I'm going to try and focus you guys on what's important because you retail guys go spinning all over the place, and that's why you're not making money. Because you're concerned about stuff that doesn't matter. Right? Nobody on a trade desk looks at a candle. Right? They're too busy creating the candle. Right? You guys are trying to trade it. Take the proper information from it. Don't get sucked into all the minutia and details and worry about the open and the close of the candle. Just look for the transaction. Right? Focus. Right? The reason why I'm going on and on about this is I'm trying to help you guys, right, stay on course and not get all wrapped up in insignificant details. Right? Just the top and the bottom. Right? Where did it print? Where did it not print? So the bottom of that candle couldn't get underneath 81. There's buy orders there. The bottom of that candle is higher. That means the buy orders are moving up. It's simple. It's really simple. Hey AJ, how you doing? They have overcomplicated this business, right? To the point where you guys are chasing your tails like dogs, right? Just strung out on too much information, right? They pump so much information at you guys. This type of candle, this kind of pattern, upside down, hanging donut, you know, blah, 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 blah. atomic wedgie, all this crap, but it doesn't help you make money. That's the problem, right? Focus on the simplicity of it. Yeah, they pump so much bullshit at you guys, right? Where I come from, there's a saying, if you can't dazzle them with your brilliance, baffle them with your bullshit. And it is the most true saying in trading that ever was, right? They are telling you to look at this, look at that, look at this, look at gamma, look at this, look at that, look at delta, schmelta, belta. All the while they got their hand in your pocket and they're sucking you dry, right? Declutter your head. Look for the bid and work off of it. Here's the thing. Before 1995, before Windows 95, charting programs on Windows 3.1 or whatever the hell Microsoft had at the time were crap, right? There was no real-time stock quotes. It was a 15-minute delay. So how did people trade for the last 3, 4, 500 years without without these fancy charts? So, guys in the room, what's going on right now? Right? We have distribution, right? We are distributing this up here. That's why the trading's kind of crappy right now. At all-time highs. Doesn't help, right? Yesterday's point of control is down here. So all of the inventory is really here. We got rid of some of it here, and that brought in buying, right? And now we're distributing above yesterday's high. Let's see if London can get us back into yesterday's range, right? I promise you folks, if you focus, you'll be better traders. Don't let them fool you, right? Don't fall for all this stuff. Keep your trading simple, keep your analysis simple. So when you actually go into a trade, your mind is clear. You're not looking at 20 different variables, right? You've either found the bid and you're covering, or you found the bid and you're going long off of it. When you're shorting, you found a seller. You sell next to the seller. When the seller goes away, cover your position. That's what it is. That's all that you're going to be doing. You're not doing anything else other than that. Everything else is just people talking so they can sound smart. And since we're not on CNBC, you don't have to worry about it. This way you can relax. Wait for the right opportunity. Take your trade. Make your money. And then go enjoy life. Let's see. Can London take us down? Take out that 81 stop. So one thing is when you come in, like say you just came in and sat down and you went, oh, geez, we're in distribution, right? We're balancing up here. There is basically this is a rotation, right? Hey, Moran, how you doing? Right? So you want to trade the edges of that rotation or leave it alone. Oh yeah, the buying from yesterday here. What happened was everybody always looks for lower, Aaron, into M period. When M period doesn't go lower, everyone gets trapped short here. So at the end of the day, they all get bought in. That's why you get a high bunch of volume there. That's basically buy-ins and people covering. Because I wouldn't want to be short going into an overnight session where every overnight session there's an all-time high. Know what I mean? Yeah, my approach comes from that I was around before you guys, really. The reason of my approach is I come from a very, very simple background, right? The people who taught me this business, right? They were very simple people. Not a lot of them were intensely sophisticated. There were a couple, right? But most of these people, like my mentor started in a mailroom of a brokerage firm, right? And I was his trader when he made his first $50 million. Not 50,000, 50 million, right? And then I was his trader and I saw him make, six, seven, $800 million. And over the years he's made about $2 or $3 billion, right? And trust me, you know, making that kind of money and being around people like that, you learn the simplicity of it, right? It's a simple business, right? Everyone's been trying to short the close, Aaron, now for weeks. And that's what keeps pushing. Do you notice every Globex we have a new all-time high? That's because everybody's shorting the crap out of the close. Why they're doing it and why they haven't learned, because they figure one of these days it'll work. And the people who are trading like that are trading with what we call OPM, other people's money. So, and they're trading a lot of money. So, if they've got maybe a $300 million fund, right, or a family office with 400 million and they're leveraged, for them to be down $5-10 million, they don't. It's not like they don't sleep at night. They're sleeping fine. And if they blow up those funds, they'll just go to France for a month or two with the wife, have some nice wine, get a suntan, come back and raise more money. Right? There we go. That's an old song, eh, Cisco? Right. And everybody thinks, oh yeah, fund managers are great, great traders. They're not. They're great salesmen, right? You meet a money manager, they take you out to a restaurant, they drop 10 grand on dinner, they pull up in a $400,000 car wearing a $10,000 suit with a $200,000 watch. Everyone's impressed and they start opening up their checkbook. Get that song in your head now. Oh, yeah, it's a crazy business. And fund managers make a lot of their money from doing deals, not from trading, right? So they haul off and make a couple of $100 million off a stock because they finance the company at a huge discount to where it's trading. One of my first jobs, we had this guy, JC, he was out of Florida. He was out of, was it Winter Park, Florida? And he would short these companies, right? He would short these companies and then he would have me call them up and say, "Can I talk to the CEO? I have a group of investors that is interested in funding your company." So like he'd short the stock from like $10 down to like 5 or 6. Hey, point of control moved up. Good distribution. Let's see if we can get some selling now. Right? So he'd short the stock down, right? And let's see if we could stay under 83 and 3/4. We'd short the stock from maybe $8 down to 3 or 4, or 10 down to 6 or 5. And then have me call the company and go, "Hey, you got a great company here. We'd love to finance you, right? We can give you a credit line of blah blah blah. Uh, you know, a $10 million credit line." And the CEO is like, "Oh, really? Great. Sure. That's beautiful. Right? This is amazing. Right? The only problem is, sir, we love your company. We love what you're doing, but man, your stock looks bad." They don't know that we're the reason why the stock looks bad because we've beat the crap out of it, right? And the CEO goes, "Well, what can I do? What can I do?" Right? "I need the $10 million, right? I'm going through money like poop through a goose. So how about this? We'll give you a $10 million floating credit line, and okay, I'm short 83 and 1/4, and I've got some bids down here. I might have to cover this if it doesn't get any lower. Yeah, I'm gonna scratch that. I shorted 3 contracts at 83 and 1/4. I covered one at 82.75, and I'm scratching the rest. So anyway, we go, "Okay, listen, right? You're a great guy. We believe in you. We'll give you $10 million, but your stock was at $10. Now it's at 5, right? We're taking on a lot of risk, but we believe in your company. How about we do this? We give you $10 million at a 30% discount to 14-day VWAP." So say the stock's between 5 and 5 and 1/4. We get the stock at $3. Of course they buy that line. You guys didn't know that this even happened until I'm telling you now, right? CEOs are always greedy for cash because development stage public companies go through money like poop through a goose, and CEOs spend money like crazy. As soon as you give a CEO $5 million, 6 months later they're asking for more. So you get the stock at 3, you're short at 8 or 9, you cover at 3, then you take the rest of it and you jam it up to 12. And that is how fund managers make 200 million, $300 million. They don't do it from picking stocks and trading, right? They'll do the deal. You know why? Because CEOs don't care about the price of their stock. All they care about is having cash come in, right? How many times have we given a CEO a couple of $1 million? Next thing you know, the guy's he's not driving a Toyota anymore. He's driving a leased Mercedes S-Class, right? Show up at the office. Hey, whose Mercedes is that? Well, I have to meet with investors. Guys, all of a sudden he's wearing, more expensive suits. They go through money so quickly. They don't care about the shareholders. They'll dilute the crap out of the stock as long as the money keeps coming in, right? And investors always fall for, oh, we're being shorted when it's because they're doing toxic financings or they're selling their own stock, right? And they've been blaming it on short sellers for 300 years. Well, this is definitely a very slow London Open, but that's how fund managers make money, right? They make their money from getting cheap stock. You never, ever, ever pay retail for stock, okay? First rule. You try and get it for free, and if you can't get it for free, you get it at a steep discount. Deep, deep discount. Yeah. Is there anything special about 8:30 London? Not that I know of. It's pretty much stuck here, folks. I am. If it stays like this, anybody have any questions? On Zoom? I don't know. Maybe Cisco. Yeah, we'll do a thing at 2 o'clock for the happy hour thing. – 8 a.m. your time exactly. Anybody else have any questions? Otherwise, I can leave you guys a little early today, and we're not getting any movement at all. You can go do what you need to do. Go to the gym. Yeah, just use today. Just relax. Early weekend. Just take it easy. I'm looking for 67.88 and 3/4 on the top. Curious to see how we'll do when we get up to this level here. It's the top of a very big zone for me. So we'll see how well it responds. Until then, keep talking about CEOs. Oh, I get into trouble if I keep talking about CEOs. Uh, they're a different breed of cat. CEOs are definitely a different breed of cat, my friend. Uh, good ones are hard to find. Good ones are hard to find. Been lucky. I've had a couple of good ones. I've worked their deals, and I was very lucky. And I've had a lot of bad ones. The wedding story is a nice one. That's a crazy story, Moran. The new high, the all-time high, is only valid if it's made in RTH. Now, I didn't make up that rule, Alexander, but that rule is the reasoning is that the exchanges aren't open, right? That's where that rule comes from. Soon we're going to have 24-hour trading, so who knows if that rule will still exist. I don't make the rules, so and I don't really think about those things too much. But yeah, that's what they say. Alrighty, folks. Have a great morning. Trade safe. I'm going to leave you a little early so you can actually go about your day. If you need me, reach out. Come join us at the Trading Syndicate. I'll be doing seminars on stock selection, stock location, swing trading, all of that stuff into this next quarter. Have a great day. Come join us. We've got some interesting stuff going on with some AI as well. I'll have more details on that next week after I play with the software that our team has developed. Stay sharp, and we will see you at 9 o'clock. The rest of you have a wonderful and safe weekend. Thank you so much. Bye for now.